All right, what's going on, everybody? Whoa, hit that one too soon. It is What the F Happened, and I am going live from Las Vegas, as you guys can see out the window here. And today we're going to talk about the nonsense that's going on in the markets. Is it real? Like, is this fucking real? Can the markets continue to keep going up and doing what they're doing? I mean, I don't know about all of you, Steven. I don't know about you, my partner in crime here, but dude, like, why did the market bounce? Why did the market go up? Like, is there any substance, any reason outside of the manipulators are just manipulating more? I don't know, man. It's insane. But that's what we're going to talk about today. We are going to rant, we are going to rave, and we are going to argue with some of you on this show. We'll be right back. All right, Steven, we are back at it. We got TikTok live. We just hit live. Whoa, we just hit live here on Instagram, if I can flip the screen around. And we are also live on all the other channels. I am really excited today to be going live from nice Las Vegas, New York, where I'm out here at a mastermind talking with lots of really smart entrepreneurs and extremely wealthy people. And you know what we're talking about? The same shit we're going to talk about today. So what happened in the markets last week, man? Like, what is this whole nonsense? That's it's party time, baby.
It's been crazy. It's awesome. You're out there in Vegas right now. Looks like you got the Beatles. What is that? The Mirage behind you, and some beautiful hotels. So having a good time out there. I know you're with an awesome group of entrepreneurs and investors, and some of your mentors are out there as well. So I'm sure you're having a good time. I'm down here in South Florida and just doing all the normal Christmas stuff this time of year. I think I was at like 3 different parades over the weekend and, getting together with friends and family. And down here in South Florida, it's like, COVID's not even in existence in this world. But we look at what's going on in the markets and it tells a completely different story, right? I mean, last week we had crazy down days to close the week. I don't know what the percentages were, but everything was down. Everything was in the red. I would look at my phone and everything was dropping like a rock. And you turn on the news or read some of the articles coming out, and a lot of it gets blamed on this new COVID variant, Omicron, which I don't believe there's been a single death from Omicron yet. So I would imagine that'd be good news if there's a contagious virus like a cold that's not really hospitalizing or killing people. But nonetheless, it looks like the markets are starting to realize that finally this week. And that's why I guess, they're saying that's why we're seeing things come back up. Now, I'll just give this a little warning out there. When we see large drops like this and these real quick booms back up, typically that's a bull trap. Typically that's something, and Chris, I'll let you expand on it. But unless you're a professional trader, right now might be the time when professional traders and smart investors are selling on the way back up, when most people are getting back in the excitement of buying on the way back up. But if you want to talk a little bit about that, Chris.
Yeah, 100%. A lot of people get caught up in that. And, for all of you, I'd love your opinion on, last week's bounce and even yesterday, and what your thoughts are on it. But what a bull trap is, I call it when it bounces. This happened back during COVID, and the market just unexpectedly does a bounce. Now, some people would say it bounced off a support or resistance level, or there's a lot of different reasons. But the biggest thing you've got going on here, and the one thing you cannot argue, I don't care who you are, I don't care how much you think you cannot argue this one point. The fundamentals don't support what's going on in the markets. Now, you can get crazy. And I was talking with a really smart crypto guy, Spencer Montgomery. He's on our 3-day trainings that we do. And we got talking about this. We were talking about Bitcoin. And he was showing me the correlations between the S&P 500 and Bitcoin. And he was showing me this move up that we've had in the S&P 500. And if any of you, I don't know if you guys can see this, but, if we came down in COVID and we kind of started coming up, and now it's literally, I mean, you know what a hockey stick looks like. It's a hockey stick. It's literally going straight freaking up. And we had some certain levels we were talking about. And he got into a mathematical equation that basically has been used in the markets and everything else for a very long time. And he showed me when the markets hit this level, they're either going to bounce down or bounce up. And Harry Dent Jr. talks about this a lot too, about these levels. And we are in some very, very interesting times with the levels and just the patterns. I mean, if any of you understand market patterns, there's a 10-year pattern, okay? There's a 45-year pattern, and there's a 90-year pattern. They're all converging. Matter of fact, a couple of them have already passed, but the government printing press, the modern monetary theory that they're doing is creating this false reality. Well, it's not really false. It's real money being pumped into these assets and pumped into the system, which creates asset bubbles. Do any of you remember 2006 and 7? Were any of you alive during that period? I think all of you were. That was the same scenario. Since the early 2000s, when the dot-com crashed, this has been happening. It's been escalated since 2008 because the printing press has been put on high, okay? That literally, like, if you have a radio, turn it all the way up, to the point where you're like, holy crap, turn that down. That's what the printing press is running at. And when it does it, it creates these artificial bubbles. It creates a false sense of reality because the money that's in the system, although it is real, it's fiat money the government's printing, but it creates these bubbles which cannot sustain because there are not fundamentals. Profits do not, except for maybe in pharma, profits do not support these levels on any company. I don't care. Maybe you could make an argument with Apple. Maybe you could make an argument with some of the pharmas. Outside of that, folks, none of these stocks are fundamentally making any sense. Now, Stephen, one last comment on that. To support that, I want all of you to actually just think of Warren Buffett, a fundamental investor. He fundamentally analyzes stocks, and that's how he makes decisions to take positions in stocks and large ones. Is Warren Buffett buying anything outside of maybe some healthcare, some pharma, and some things that are surrounding some of these things going up? That is it. He is selling most everything. Same thing with Bill Gates, same thing with Mark Zuckerberg, same thing. Well, Ray Dalio won't tell you what he's doing because he can't, because he runs Bridgewater Capital, but he's very bearish as well. If you look at his portfolio makeups, they've gotten more and more conservative because he knows something's coming. Stephen, what do you have to say about this? And I want to go to the audience too, because we got some good stuff coming in here from TikTok that I want to comment on.
Yeah. And, I made a post on social media that got a lot of reactions over the last week when everything was tanking last week. Just, I simply asked the question, if things, if you're of the belief that we're going to see a market correction or probable crash, let's say 40 to 60%. Or maybe even more, in crypto space, for instance. But what's going to happen first? Are we going to see the stock market come down and crypto follow? Are we going to see crypto lead the way on a drop and then the stock market comes after? Is it going to be an inverse relationship where the stock market crashes and all of a sudden Bitcoin and crypto starts to take off on the upside? And what's that look like? And that's one of the things we really would like with this show to happen, is to get you all more involved and more, a part of it. And then those of you that make really intelligent comments and have, good opinions on this stuff, we want to bring you on the show. I mean, chat in the box right now if you'd like to be on WTF with us one week, just to share your opinions and your thoughts. So make sure you're following us on Facebook, on YouTube, on Instagram, and, comment when we make posts like that, because we're looking for those of you that have intelligent opinions or maybe outside the box thinking. I mean, I love to hear what people are thinking out there that's not the mainstream narrative. You're not just repeating talking points. I mean, for me, I'm looking at two charts right now, and I can share the screen here, but it's Bitcoin over the last 3 months and it's the S&P market over the last 3 months, and the charts are essentially identical, right? I mean, they track very, very similarly, like you were just saying, like Spencer was saying. And that's what I've been saying all along, because one of the arguments for crypto, right, is it's a hedge against the stock market and against the traditional means of investing like that. But if it tracks the same ups and downs, how are you hedging against it? And I've never understood that argument in crypto. So if you have a different thought on that, we'd love to hear it, because I'm not married to my ideas or thoughts in any manner. I can be easily persuaded one way or the other, but you better bring in a good argument, because I do have strong beliefs in what I'm saying right now.
Yeah, we got some comments that came in. One of them came in from good old TikTok, my favorite. And I just want to make a clear comment. I wore my shirt today because this is my TikTok shirt. Haters need hugs too. So a comment came in on TikTok that said, blah, 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 blah. So obviously that person very much agrees with what we're saying about these markets not making any sense, because he couldn't even say anything but blah, 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 blah. We have some very intelligent haters on TikTok. So thank you for your comment. We appreciate it, you piece of shit. Anyway,
Chris, he's probably let me pull this up real fast. Your friend on TikTok is probably a member of this elite investing club that I'm pulling up on the screen right now.
TikTok. Let's see. There we go. Jim Cramer's investing club is bringing new people into stock market.
He's probably part of Jim Cramer's new investing club.
Good idea, buddy.
Listen to me. If you follow Jim Cramer's advice, you deserve everything coming your way. That piece of shit last week talking about making the United States military enforce vaccine mandates on the entire population. That guy's been a hack for years, and that just solidified it. And if anybody wants to argue with that, bring it on.
Yeah, the funny thing about Jim Cramer, and I'm a little bit different, so I don't hate Jim Cramer. I think he's a very good showman. I think he's very good at bringing attention to himself and creating a cool show. Like, people watch him, with the bells and the cows and all that shit. It's entertainment at its finest. Hey, What the F Happened is fucking entertainment. You like me to swear? I swear. We argue, we rant, we rave. That's what the F is all about. We want to have you involved in that. And I don't care if it's just saying blah, blah, blah. It doesn't matter. Whatever you want to say. But, the thing is, you got to really take some things that you see in the news as gossip. And some things you see in the news is entertainment. And entertainment doesn't always equal dollars. By the time Jim Cramer makes an announcement that a stock is good, it's all over. It's a pump and dump in most cases. Like, his track history, if you follow his track history, isn't so freaking good. That's what we should do, Stephen. We should pull up the track history on Jim Cramer, on all of the things that he's like supported and said. I bet you any money it's probably pretty crappy.
It's a little embarrassing.
A little embarrassing. Yeah. So let's see what we got coming in over here on Instagram. We got one person that said, fuck you, bro. That's awesome. Hey, man, fuck you too. And another person that said, fuck. Yeah. So people love that word, man. It's a popular word these days. All right, man. Yeah. Well, hey, we love you guys. Haters need hugs too. So to all of you, from all of us, hey, it's a fuck you kind of day. I guess that's just where we're going with it. All right. So let's get back to some tangible stuff here. So we got Ethan said, James Rickards, and we all know James Rickards. He's written many books. He's a gold bug, very good economist, different than Harry Dent. They're kind of, on two sides of the coin, but I love James. I love his book, The Next Great Depression. And what is it? The Death of the Dollar or something like that. I was just reading that one. But he said, James Rickard is predicting that it's all going to drop big when the CPI report comes out on Friday. I bookmarked it on my calendar just to see if he was right. Now, economists make these kind of predictions all the time. Harry Dent's been making lots of predictions. Jim Rickards is making lots of predictions. And, they're all right in their own way. They're using different levels. They're using different things. I think the CPI would be good. And CPI stands for Consumer Price Index. I think that's a good measure. Do I think it's going to be enough to drop the market when the government's, got these printing presses running full press? I don't know. Ethan, that'll be a good one to mark. It'll be a good one to watch. It'll be a good one to see if it really does. We are literally walking on thin ice. If any of you have ever been to a cold area like I live in Buffalo, New York, and you walk out onto a lake about this time of year, it looks like it's frozen. It's not. You're going underwater. Well, we are on thin ice. That's what the markets are. They're a house of cards like I've never seen before. And I get people all the time saying, oh my God, yeah, but I made 40% last year. Good for you. Like, do you want a cookie? You want a cookie and some milk? Like, come on, good for you. Everybody made money. Monkeys can throw darts at the wall, and they did a study on this, and make money in a bull market. No one is smart when the markets are going straight up. You're not smart. Jim Rickards isn't smart. Harry Dent isn't smart. You know who's smart? The people that actually can keep the money that they make. Now that is a genius. So I challenge every one of you. I don't care if you're on TikTok, Instagram, Facebook, YouTube, any of the channels that we're streaming on right now. Keep your money. All of you have made great money. And I think that's phenomenal. For the first time in a very long time, you can literally look around and people literally have money. Like during COVID, a lot of people paid down debt. Yes, they probably racked it up. You should see it out here in Las Vegas. The amount of people gambling, they're probably all losing their money, but we won't even go there. But it's awesome. People have disposable income again. They have money. Some of it's the government money they gave them. Some of it's money they're making because they got big raises at work because, hey, nobody wants to freaking work unless they're paid golden nuggets. But, it's awesome. However, you're being stupid with your money. You're plowing your money into markets. You're plowing your money into things you don't even understand. And some of the laws of wealth state exactly that you should not do that. If you're seeking unrealistic returns, I'm having a conversation with some crypto guys that are investing in some things I have no idea about. Okay. And I'm not going to be a crypto expert. We are going to cover some Bitcoin and some Ethereum today, but he's talking about it. He's talking about 160% return. Steven, think about that. Imagine if we all could just make 160% return. It was just as easy as you just buy one of these shit coins and you make 160%. We'd all have Ferraris. I was just driving Ferraris yesterday. It wasn't mine, but if that was the case, I'd be my Ferrari I'd be driving. But that's not the reality. The reality is it's great to sit there and boast and brag that you're making 160%. It's great to say that your Coinbase account is up 200 or 300 or 1,000%. Keep it. That's my challenge to every single one of you. You want to tell me you're smart. You want to come on this show. Show me how you plan to keep your money. And what do I mean by that? Don't lose it. Because when the whole thing goes down, when the stock market goes down, when the crypto market goes down, which it will, they are almost directly correlated, you will not keep your money because you are taking unnecessary risks, and therefore your money will flee you because you're in something you don't understand, or you're in something you think you understand that just ain't so. Stephen, what do you have to say about that?
No, it's just, I say a lot that crypto reminds me a lot of Vegas. Like, to me, if I'm going to gamble my money, which, I believe a lot of these shit coins and things like that are purely a gamble, right? I mean, I think we can all agree on that. It's a pretty high risk gamble. But if I'm going to gamble my money and be willing to risk it, I'd rather be where you are, Chris, out in Vegas, sitting at a craps table or a blackjack table all night, getting free drinks, having a great time, bullshitting with people and having fun and making new friends and enjoying myself in the bright lights of oxygen pumped casinos out there than sitting on my couch with my iPhone, looking at my Coinbase account, hoping for the same gamble. And, Kenny Rogers, I think, said it best. You got to know when to hold him. You got to know when to fold him. You got to know when to walk away. And I think that's what you're saying right now is, you challenge people. Hey, make all the money you want in that Coinbase account, but let's see how much of that you actually keep and use in your life. And, I'll give my brother a lot of credit on one thing real fast. He's been investing in crypto for many, many years now. He cashed out a bunch of his crypto that he made a bunch of money on and used it as a down payment on an Airbnb cabin up in North Carolina. So he took profits from crypto. He's keeping them in a long-term asset that's going to provide income to him and his family regularly moving forward in his life, and has all the extra crypto in there. That's basically house money now. So strategies like that, I absolutely love. But, investing is a strategy. And if you have a strategy, stick with it and make sure it works. To me, the stock market is it's so high. It's not driven by any reality right now. To me, that's a huge gamble. So I'm willing to take risk. I'm willing to gamble, but it needs to be when the time is right. To me, it's too risky. It's too much of a gamble right now. I will play things safer right now. So I'll keep money sitting in my own private bank, for instance, in their compounding instead of risking it in the markets, or I'll find those deals that I can lend my money on. Safer things. I'll happily take a 10 or 12% return all day, even 8% over, risking at this high risk levels right now to make 15 to 20%. Now, will I go for those investments? Yes, absolutely. But to me, this right now in this market world that we're in, it just doesn't make sense to go there. And that's what I just hope that people understand from, these webinars and these trainings, these podcasts that we do is, open your eyes and ears to, what is everybody else doing? What's out there? What are the other options? And decide what's best for you and your family and follow that strategy.
Yeah. We got a lot of stuff coming in from Instagram here. I'm sort of ignoring TikTok here because we don't have too many people on TikTok. Guess everybody's sleeping from the hard night out, but we are going to BB Singh. We are going to cover that with crypto in a second. So on TikTok, we'll come over there, but on Instagram, we had a lot of chatter coming in when you were talking about that. And, some people agreeing, but, I think listen, I understand everybody that wants to make the big returns. I mean, it's hard not to, Stephen. It's hard not to want to make 160%. It's hard not to want to buy Shibu Inu when it's, 0.00000000053, cents per share. But what people don't understand is it's the old penny stock thing, right? People think that buying a penny stock or buying like an inexpensive, shit coin like Shiba Inu is a good investment because they can own more because it's cheaper. All I can tell you is you are just you're not even a penny away. It's hard to say. You're like a fraction of a penny away from being completely broke. And looking at that, you'd be better off buying Bitcoin and owning a very small percentage of Bitcoin than you are buying Shiba Inu and owning a whole bunch of it because you think you're going to make a lot. It's the same math. Like, people just don't understand math. Did they, Stephen? I don't know, man. I mean, we went to school back a while ago. I graduated in 96, but did they stop teaching math in school and stop teaching compound interest? Did they just start teaching these fancy algorithm things in mathematic classes like Math 101, where they teach you how to be an engineer and teach you how to be an employee and forget about business math and simple mathematics? Because something's wrong, man. People can't do math anymore. Because
you joke, but that's literally happening in places right now. So
it's insane. It's the same thing, listen, like, Rick's on here. I just put his comment up. And one of the things that, a lot of people that, we know, my friends like Rick and lots of other clients, the thing that they love is they love investing in things that have a tangible backing, something that has substance, right? Like, does Shiba Inu have any assets? Does Shiba Inu have any fundamental backing? Can you securitize Shiba Inu with anything? No. In some of these coins, I want to explain one thing because we're getting into the crypto. And this is, again, I want to be very clear about something. I am not a crypto expert, but you know who is? Spencer Montgomery, who is out here. He's one of the founding members with me of Power Room Mastermind, where we're at. He is the utmost expert when it comes to crypto. And not only that, there's lots of other experts out here. And we're talking about this phantom reality, not the metaverse, but this phantom reality of returns. And we were talking about like how some of these shit coins can pay these kind of returns, and say, we're going to pay you 160%. I said, I don't get it. None of it makes any bloody sense. And he says it makes all the sense in the world. He says, when they're judging the returns, you got to understand that some of those coins, you can't even buy them in your thing. You have to trade other coins to it. So you have to take a Dogecoin and trade it for this other coin. Again, correct me, I might be a little off in explaining this, but he did a better job. So you're trading one worthless coin for another worthless coin. And that is driving this return. So if you've got worthless coins and you've got tens of millions of them because you bought them at 0.00000000053, a fraction of a cent, why is it hard to say 160%? It's not even real. It's not even real. Why is it that in the Wall Street world, that's not the case? You don't have stocks that pay you 160% stated yield or dividend. Have you ever seen that, Stephen? You ever see a stock pay a dividend of 160%?
I'll take it if you
I'm sure Kramer would be talking about that one, wouldn't he? So, it's just sometimes when you're depending on where you're at. Now, some of the people doing crypto and a lot of these shit coins, like, they're making lots of money. It's trading these NFTs, the metaverse stuff, buying land in the metaverse. These are the conversations that have been going on out here. And it's fascinating. It's scary. If any of you have ever seen that movie, I just forgot an audience, help me out here. What was that movie? It was kind of like the metaverse where Driver Player One or something Player One. Do you remember that movie?
Ready Player One.
Ready Player One. Like, we might actually be entering into that movie, like that world of reality where we're not even in reality. Like, what I see behind me, that's real, man. I can jump out that window and I die. I can go kick that building. But in this fantasy world, the metaverse, like, none of that's real. Like, you don't really die. You just take the goggles off, right? You guys know that. And they're staking and selling land in this. Now, maybe there's something to that because there very well could be a time where literally when we go to work, we actually log into our computer, put goggles on, and we're at work. We no longer actually get in a car and drive to work. Like, that to me is not a world I want to live in. I watched The Matrix and I took that shit pretty fucking serious. Like, there was the fantasy world, right? Red pill or blue pill. Give me the shit world that I can actually control and understand versus this fantasy world. I don't know how all of you feel about this, but let's get someone to kind of talk a little bit about this. I want to talk about crypto. I want to talk about some of these shit coins and some of the stuff that we're talking about with these big returns. Because I know a lot of you, especially here on TikTok, a lot of you understand this far better than Stephen and I do. And I got some stuff coming in here. Let's see what we got. Let's see. Anchor protocol on Terra Luna gives 19% APY fix. So 19%, that's still pretty darn good, but it's not 160. And he's talking about Terra Luna. If anyone knows anything about that, That's Demons. The Nez, I believe, is the name there. But it's just I can't make any sense of this. And just knowing the laws of wealth have been the same since before Christ, since back in the times of Babylon. Like they've always remained the same. And one of the laws is if you seek unrealistic returns, first off, you're going to find fraudsters and scammers because that's where they reside and that's where they live. And they're going to lead you down a path where they're going to win and you're going to lose. But I just don't understand this world that we're entering where people think that that's real. Is it because they just don't know what's not real? Or is it because they literally are just so blinded by these fake returns and these big numbers on a piece of paper that says they're rich and then the next day they're poor? Like, what is it, Stephen? Help me out here.
Yeah, I'm not very speechless too
I don't
often.
even have a comment.
I don't know what it is, man. It's craziness. I'd love to hear what other people have to say.
Yeah, well, the audience isn't saying much here. So I don't, either they agree or they just don't know like we don't know. They're like, I don't know, man. I don't know. I've got my account up here and I'm a multimillionaire. Great. Good for you. Keep it. Keep it. That's my challenge. Keep the money.
I do have people reach out to me sometimes though to ask about the crypto staking, right? Because you can stake your coins, which basically freezes them where you can't sell them. And then whoever they're with will pay you, 5 to 10 to 15 to 19%, I guess 160% in the case you're talking about, annual returns by keeping the money there. But if that coin is a shit coin and it's in this volatile world, and then that coin loses 99% of value, you're now getting paid 19% returns on 1% of what you had in there before. So that 19% return that you staked doesn't look that good any longer, right? Yeah. So I just feel like it's a way of kind of locking you in and not giving you the liquidity of getting out quickly when you need to, which a lot of these cryptos fall so fast you don't even have a chance. But it's locks you in, and I think that's their way of trying to stabilize it a little bit where you're not getting as much movement. I don't know why they're doing it, but that's got to be wise, just to try and keep the value up.
Yeah, it's got to be something like that. And what's up, Leo? We got some cool cats joining us.
Leo, I haven't seen Leo in a while. How's it going, Leo?
Oh, this is awesome, dude. Did you see this comment here from Connor? Man, did you see that girl in the red dress, though? Yes. If any of you don't know what we're talking about there, it's in the Matrix. You guys got to check it out. It's an interesting time. And unfortunately, these times right now, which seems so good for so many, are going to come crashing down eventually. And when is that? Well, Jim Rickards is saying maybe Friday with the CPI report. Harry Dent is saying probably into mid to late 2022. Okay. And there's truth to all of them. They are economists, folks. They're much smarter than any of us, much smarter than me, much smarter than Stephen. But the one thing they can't do, just like the one thing I can't do, the one thing Stephen can't do, and the one thing any of you can't do, including BB Singh, is time the market. There is no timing the market. You just cannot do it. It has been proven that no one can time the market. Even Ray Dalio, the founder, former CEO of Bridgewater Capital, the largest hedge fund in the world, has tried timing the market based on such a complicated system that he has built to track this. He was so certain the markets were going to crash. He was wrong. He wasn't wrong. He was dead right. But what he couldn't predict is the actions the government would take with the printing presses, and that kicks the can. You've all seen it, right? When you don't want to do something, what do? You kick the can. You put a Band-Aid on it. What does the government do every time they're going to shut down? They kick the can. Are they fixing the problem? Absolutely not. They're not fixing anything. They're literally putting a Band-Aid on and say, we'll get that in 2 months or 3 months or 6 months. They're never fixing anything. Nothing out there is getting fixed. Everything is just getting worse. And here we go. What do you got there? I'm going to show TikTok this, and then I'll show.
Yeah, they're just, they're coming out today saying the Fed's interest rate policies can't fix this inflation, and talking about why that is. And, part of the discussion is, of course, the Federal Reserve, for those who don't know, their mandate is basically to maximize employment and create stable prices. So keep inflation in check. For the Fed, their goal inflation is right around 2%. So, as you guys know, we were at 6.2% this last month. I guess the new figures come out on Friday, so we'll see where that's at. So they're well above where they are. But what they can do to fix that typically, is to raise interest rates and start to cut back on some of their, money that they're pumping in, what they call tapering, which is, they're putting about $250 billion a month right now into the markets. They need to taper that back. So if there's not as much money going to the markets and interest rates start to rise where the flow of money is no longer free or very, 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 very cheap, typically that will tighten things down and that'll control the runaway inflation. And then, there's arguments back and forth on whether the labor market right now is helping drive some of this and stuff like that. But, more money in the markets, more of this free money and this low interest rate and all the money being pumped in and given out through unemployment, all this other stuff flowing in with less people working and creating progress. I mean, that just, common sense says that drives inflation too. So that's why we're seeing all this crazy inflation. And basically they're kind of admitting right now that there's not a lot the Fed can do without either crashing the economy to get this fixed. And, they're starting to say it. And Chris, you've talked a lot about this in the past, but it's starting to come to the mainstream. The real worry might be deflation. And that may be the central bank's biggest problem over the long term.
Well, the central bank doesn't like deflation because deflation brings asset bubbles down. And also deflation is just not good for the government, but it's good for all of you. It's not good for you if you're on the wrong side of the coin, but it's good for you because then all of a sudden pricing comes down. Then all of a sudden you have opportunities to buy into things at actually real prices, fundamentally sound prices, like real estate. Is it fundamentally sound right now? Some would say yes. A lot of people would say yes. I would say right now it's a speculative bubble. You can find deals, but you got to look really hard. It's like a needle in a haystack. So we always talk about the problems. Let's kind of put some tangible things that all of you really could do. So here's the first thing I want I got a question for all of you. And I got a question. Stephen already knows the answer, but how many of you think banks are out there to serve you? Okay. How many of you think banks, like traditional banks, are there to serve you and actually do good by you? How many of you think that? Let's get a comment here. Someone's got to come in on that. I think everybody's tired this morning, man. I'm the only one out here on well, maybe not the only one, but on Pacific time, it's pretty early. How many of you think banks are there to serve you? Okay. Jimmy said none. Leo said none. Anyone on TikTok? What do you guys got over here on TikTok? What do you guys got on Instagram? Any of you think that banks are looking out for you or doing things for you versus them?
I like the banks. They give me a free lollipop every time I go in.
Yeah, you get that's the best thing you get at a bank. Hey, maybe you can walk into the bank and you get some of that shitty Keurig coffee that's probably not been cleaned, and you'll probably come down with septic something, from drinking it. But anyway, the whole point is banks are there for themselves. They're profit machines. And banks, what have they taught all of you to do with your money? Give up control. You go work for money, you work hard for your money, or you make money somewhere. And what do? The first thing you do when you have money is you take it to the bank and you deposit it in the bank and it feels good. And then you grab a lollipop. And what does the lollipop wrapper say? Dum-dums. There is no other sucker brand found at banks. And if any of you in the United States can find me a bank that offers a lollipop that is not a dum-dum, I will send you $10 cold cash just so you can take it into a different bank branch and see that most bank branches only serve dum-dum lollipops. So yeah, you're right, Leo. It's a sucker, not a lollipop. And there is a difference between suckers and lollipops. Now, it is a sucker because you're all suckers and you're all dum-dums for going in thinking the bank is working in your favor. You put your money in there and the bank does not take your money and put it in a little box with your name on it. The bank moves that money. You gave up control of your money to the bank. And because of that, the bank makes 400 to 1,300% more than you do by moving your money. The bank just lends that money back out. How many of you have money in a bank account, but yet you'd go to that same bank and take a loan out when you already had money in the bank? Do you realize the bank's just giving you your own money back and paying you nothing and charging you a shitload for that? Oh, but I got a loan at 3%. Yeah. And how much are they paying you on the money you've got sitting in that bank account? Probably zero. All I can tell you is just look at yourself in the mirror. Go find a mirror, look at yourself and just say, sucker. Because that's what you are. Sorry, I looked in a mirror. I just had to try that to feel it. You're a sucker. You literally have money in the bank that you gave up control to the bank. And then you went back from that same bank and you took money from them at a higher rate. I guarantee you 400 to 1,300% or infinite amount more than what you are making if you're making zero. You are the dum-dum. You are the sucker because you've been lied to and taught that banks actually give two flying fucks about you and your money. They don't. They don't care at all. And then the government plays into this because they kind of have to, and that's what the Fed is all about. It is banking. So what is the tangible step? Go ahead, Stephen.
I was going to say, you know, as bad as banks are, they can be very useful as well if they're, you know, if you use them the right way. And that's the key, is you need to use the banks the way that they've been using you for so many years. And just to give a quick little plug, I am going to teach this exact concept at 1 p.m. Eastern today. So I put a banner on the bottom of the screen. But if you go to, what is it? If you go to moneyschoolrei.com/Wednesday-webinar, you can register for today's webinar. And I'm going to teach you exactly how you can start using the banks like they use you and become your own banker. And when you learn that one strategy, it can change everything. And what I want to add to that as well is, you know, as bad as the banks suck and they use us and they do all this crazy stuff, it could be worse, right? And what I mean by that is, you know, thankfully, let me just share my screen real fast here. So there was a nominee for the comptroller of the currency, which is basically a position that runs the banking industry. And the lady that was nominated for this position, Saul Amarova, you know, she basically hates banks, hates private banking with, you know, as we know it today, like Wells Fargo's and the Chase banks. She wanted to end all that. She wanted to end you being able to have a checking account. And she basically wanted the Fed to take over everything. So if you think banking is bad now, just imagine if the Fed had complete and total control over every single bit of your finances. And luckily, there's enough people still in our government and Congress that said, oh, hell no, that's not going to work. And she was forced to withdraw her nomination yesterday. So that's a little bit of good news moving forward. But you just got to learn how to use the banks, and it can be a very powerful thing.
Yeah, you know, and I love Lisa's comment. She chimed in and said, you know, I have my own bank. You know, she has a privatized bank, and she said, I paid cash for my car and I'm making payments back to myself. Now, most people that don't understand privatized banking, the infant banking concept, probably listen to that and like, wait, if you paid cash for the car, why would you make payments back to yourself? Well, because we all know that banks make a lot of money, right? 400 to 1300%. So if you want to mimic what a bank does, well, then treat your money the same way you treat the bank's money. If you borrow money from the bank for a car, you make monthly payments to that bank. And if you miss a payment, they take your car and your credit gets shot, right? We all understand how to finance a car. So if you start thinking like a bank, which is the smartest thing all of you can do, because what Stephen was saying is banks are good because of this or that, and because they give you suckers called dum-dums. But banks are also really good because they have figured out a lot of the shit that we need to learn. And all of you are blind or just ignoring it. But if all you did is study banking, and I know it's a dry, boring topic, but if all you did is study banking and you went out and you literally mimicked what a bank does every single day with your money and everybody else's money, and you mimic that, do you realize how wealthy you'd be? Well, Lisa does, because Lisa said, you know what? This is pretty cool. I'm going to do exactly what the bank does every day, but I'm going to treat my money, okay, my private bank, which she did. She doesn't have a physical bank. She's got her own privatized bank. And I'm going to treat my money the same way as I treat the bank's money. Okay, so she takes money from her bank and buys a car. And then what she does is she figures out how much the bank, the traditional bank, would have charged her monthly for that car, principal and interest. Because I don't think any of you are getting loans that are just, you know, there's no interest. Some of you maybe, but it's not real. Principal and interest. So she says, okay, the payment on that car is going to be hypothetically $700. She says, I'm going to set up a bill pay and I'm going to pay my bank back $700 a month. Do you all real? So some of you are thinking that's so stupid. Why would you ever do that? Well, we want to know why? Because Lisa will get all the money back for every single car she ever buys, drives, and owns by applying that one banking strategy. Because you know what she did? She took back the banking functions into her life instead of giving up the banking functions to the greedy big banks. Do you realize how brilliant that is? Do all of you even understand that concept? But then she went an additional step and she used a vehicle to hold her capital that pays her uninterrupted compound interest, meaning her pile of money that she started with never stops earning interest for the rest of her life, even if she uses it to buy cars, invest, do private lending. Lisa does a lot of private lending, which I want all of you to just think of that one thing. I know crypto is attractive. And listen, me and Steven, we both invest in Bitcoin, Ethereum, and crypto. I know Steven's played with Dogecoin and Shiba Inu, you know, and listen, we might do it very different than all of you, but we're in the game. We're not saying we hate crypto. I think it's around for a while, but I would be very careful with shit coins. But fundamentally, the one thing all of us do, whether it's Lisa, Steven, or anyone on this team, we also practice banking. It's called the infinite banking concept. We use that concept and that process in our lives day in and day out. And that's what Lisa's doing. And kudos to her. So does everybody understand that? So BB Singh, let me comment on this. He's on TikTok. He said, but the car depreciates in value. Point taken. Love it. Cars are one of the worst investments. I don't care if you buy a Ferrari, a G-Wagon, a Maserati, or an Audi. Okay. I don't care what car you buy. The second it rolls off the lot, it's going to depreciate. You're going to probably lose 50, maybe 30%, depending on when you sell the car. You're going to lose money. But BB Singh, I want you to think about what we just talked about Lisa doing, right? Treating her money the same as she treats the bank's money. Does it matter if the Audi she bought goes from $60,000 to $30,000 if she's making payments back to her bank and controlling 100% of all the money that she basically gets or pays for that car? It doesn't. Even though the car drops $30,000, it doesn't matter if her car goes from $60,000 to $10,000. That would be a really bad depreciation. It doesn't matter to Lisa or to us because we get all the money back for the car because we are the bank. So if we get all the money back already, at the end of the day, let's say it's a 3-year loan, a 5-year loan, a 6-year loan, doesn't matter. You're the bank. You set the terms. It doesn't matter if the car depreciates because all the money's back in your bank, even though the car's worthless. So if she sells that $60,000 car for $10,000, or if she just donates it for a charitable donation and gets a tax write-off, she already got all the money back because she made interest on all the money the entire time. Plus, she recaptured all the money she used to give away to the banks. Does that make sense, BB Singh? And then Sean, let's see. We got Sean. We'll just call you Sean Richson. What are the terms of the loan from your IU? Oh, man. From your IUL. For some reason, everybody always thinks we're talking about IULs, and we are not. IULs do not work for this. I don't hate IULs. I think IULs have a place in the market, and it is long-term. You're not going to start an IUL and then immediately take money out and go buy a car. It's not going to work. What we use is specially designed and engineered whole life policies because those actually and forever. And if you think I'm wrong with this, then answer this question. Banks, in all their ultimate money wisdom and their smartness, why do banks not buy IULs? Why do they buy more whole life than any other company and anyone else in the world? They don't buy IUL, they buy whole life. Is it because they're stupid or because they know something you don't know? Well, we don't use IULs at all. We have done countless videos. If you want to learn about IULs and whole life and which one might be better for you, watch my videos on YouTube and subscribe to my YouTube channel. It's at the Chris Naugle. We post free videos all the time. Great content. So go to at the Chris Naugle on YouTube and watch the IUL video, and you will see the differences contractually between them. IULs. Why does everybody talk about IULs? I'm just going to hit this real quick, Steven. Is that all right?
Yeah, man. I hate them for the record, but
and I'm not a fan. IULs, Indexed Universal Life, the hottest insurance product on the markets in the brokerage channel. The hottest one. It must be the best thing since sliced bread because every single broker, every single agent, every single financial advisor is touting the IUL. So it must be the best, right? Can any of you in your ultimate wisdom tell me why all the brokerages, why the bank brokers, why the agents, why the financial advisors would tell you that an IUL is way better than a whole life? Please tell me that reason why. Can anyone? Come on. We got TikTok, what the heck? Come on. Let's see. What are the terms of your loan? We'll get to that kind of, but I don't have the money. All right. So, all right, let me tell you why. How many times have you ever heard the slogan or the statement or the quote that says, follow the dollar and you shall find the truth? IULs pay the highest, and I'm going to go on record saying this, pay the highest commission out of any life insurance sold in the markets. The highest. The advisors that are selling them, and I'm not going to say it's always the same. We have good advisors like the one that works with Devin, Sam, he's the shit. And he's an IUL guy. They can be designed where they actually don't pay as much in commission. But IULs, the way that you know of them and your financial advisor is selling them to you, can pay anywhere between 80 to 120% of premium. That's right. So you, as the client that buys this awesome new product called an IUL, You put $10,000 into it per year. Do you realize that that advisor made either $8,000 to $12,000 in commission for you setting up that plan? How many of you would recommend that to your clients if you were greedy and chasing commissions? Listen, I'm not going to lie to you. All of you would. All of you would. Wow, for every 10 grand somebody puts into this IUL, this awesome product that my brokerage says is the greatest thing, I make $8,000 to $12,000. Sign me up, motherfucker. Right? That's what happens. But then you learn about this product called a specially designed and engineered whole life that has been used for hundreds of years and that the banks buy more of than anyone else. But then you learn that to construct it so it works for banking, you have to take a 90% cut in commission. So now let's now remember, I want you guys to follow me. The IUL paid you $8,000 to $12,000 for every $10,000 in premium deposits your client makes. Just remember that. That's the IUL. The specially designed and engineered whole life pays you roughly $387 for every $10,000. So you're either going to make $387 or you're going to make $8,000. If you're an advisor, which one are you talking about? Do I need to say any more? Does everybody make fucking sense of that? If you follow the dollar, you find the fucking truth. What part of that don't you understand? IULs aren't the best thing. They just pay the most to the advisors. Get out of your own head and learn why people do things. Why is term insurance one of the highest, most talked about life insurance products in the insurance world? Does anyone know? Because they only have to pay out, the insurance companies only have to pay out on less than 2% of all of those policies. It is like 99% profitable for the insurance companies. Where are they going to put their marketing dollar? The whole life that they have to technically pay out on almost every single one if you keep the policy in force, or the term insurance where they know statistically, mathematically, and factually that they're only going to pay out less than 2%. Which one are you putting your marketing dollars to if you own an insurance company? Follow the dollar, folks, and you'll understand why the only thing you ever fucking know in your life is buy term, invest the difference is way better than anything else, or IULs are the best thing. It's because they're making the most amount of money. Wake up, folks. Wake up, America. Wake up, world. You have been lied to your entire life. That's a fucking fact, and we're telling you the truth. I don't give a shit if you believe us or not. I don't care if you like what we're saying or not. It's the truth, and it fucking hurts. I'm done, Stephen. What do you got to say?
I got nothing to say after that, man. I agree 100%.
I'm so mad because I deal with advisors, financial advisors. I spent 16 years in Wall Street. I know how they think. I thought that way. I did what they do. I sold the high commission products. I did because that's how I was compensated and that's how I was trained. When I retired from Wall Street in 2018, or I said that wrong, in 2018, when I retired and I started seeing what the wealthy did with money, and I learned that it was completely the opposite of what everybody else does with money, I started to piece it together. And I started to realize the big lie that I was telling and being taught my entire life. And I changed and I said, you know what? I'm going to teach the truth, which is what the wealthy do with money. And that's what we do today. And unfortunately, it is an uphill battle. It will never be easy. It will never just be, oh yeah, everybody believes us. No, because you're torn. Who do I believe? Who's telling the truth? Is my financial advisor that I trust telling me the truth? Or is this silly guy wearing a haters need hugs 2 shirt who doesn't have a fancy suit on? Believe me, I got a whole closet of very expensive custom designed suits. I just don't wear them. You know why? Because I've graduated from them. I don't have to wear them anymore because I don't have something to prove to you. I don't need to put a jacket on, a tie on, a fancy, like expensive shirt on just to convince you that maybe you should listen to the guy telling you the truth. No, I choose to put a baseball hat on, a fucking t-shirt, and wear flip-flops because that's where I am. And that's what I've earned the right to do. And with that being said, you guys can decide which side of the fence you're on. Let's see what comments we got. Which company do you like to make for an IUL? See, here we go again.
You just follow them. You just follow the money. Just follow the money, right, Chris? I mean, one of the nice things about what we do is once they gets the concept of banking and understands the power of this, they can never go back. They're never going to go back to the old way of looking at banking and looking at money. And that policy is going to perform guaranteed for the rest of their lives. So we can go to sleep at night knowing we're not going to get hate calls 2, 3, 4, 5 years down the road. Hey, why the hell is this thing not performing the way that you showed me, especially when the market crashes? I mean, I almost feel bad hey, those IUL advisors right now are loving life. They're making a ton of money. They're buying boats and new cars. But what's their life going to look like in 2, 3, 4, 5 years from now when we hit a crash and we hit a bear market and things aren't as rosy as they are today, and those IULs crash and that cost of insurance year after year continues to go up and up and up and up and up and up, whereas our whole life policies, we sell them, we sit back and we sleep perfect at night because the cost of insurance on my 6-year-old son today is going to be the same cost of insurance he has on that policy when he's 60 years old. And that's a beautiful thing for them and for us. And that's what we do, is win-win situations. And that's why I do what I do from morning to night every day of my life, because that's what I decided 10, 12 years ago. I'm never going to do business just to make money. I'm never going to do business just to get a quick win on something. I'm going to do what's right for people, what's good for the long term. And that's all I've done ever since.
Yeah. So I'm going to go to the audience here real quick because TikTok's got some great questions coming in here. So Sean said, what are the terms? I'm going to go back to that question that put me on my little rant about IUL. So let's just eliminate the IUL part. What are the terms of the loan from your private banking system, which again is what we use, and what everybody that knows what they're doing uses, is a specially designed and engineered whole life, not the whole life you buy from your broke ass brother-in-law or the life insurance store. I want to be clear. It is a very different design, totally different than regular life insurance. So what are the terms? Well, the terms are the insurance companies, and I'll just use one particular company, I'm not going to name the company, pays 6% with dividends. Okay. So you're making 6. That's how much you're going to make on it as of 2021 and into 2022. You're making 6%. So if you take the money from that contract, and this isn't firmed up, Stephen, did we get the number yet for the new loan interest rates? 4.75?
I haven't heard officially, but yeah, it's coming.
Yeah, we don't officially know, but we know it's gone down a little bit. So let's just say you're making 6, and to basically take the loan from your death benefit, the insurance company will charge you 4.75. Can anyone just do the math for me real quick? If you're making 6% gross and your cost to use your money is 4.75, how much money did you make gross? 1.25. And if that money compounds every single year, so if you got money that's going in it and every year it's earning 6, so next year it's compounding, meaning you're not making whatever your money you have in there, it has gone up because you've earned interest. So now you're compounding on a higher amount, whether or not you left the money in there or took the money out. Everybody needs to learn what compound interest is, because Albert Einstein explained that well. Those who understand it earn it. Me, Stephen, some of you. Those that don't, pay it. Most of you. You don't understand compound interest. So if you're making money on money that's continuously always growing uninterrupted, and you're taking it out at a rate that is lower than what you're making, who's winning? You are. You just won. So those are the numbers, okay? But then let's get really like into the terms. So like Lisa, let's use her example where she bought a car using her private bank. When she took the money out, she already was making money even though she took the money out, because she makes that spread. And every year, her spread gets bigger and bigger and bigger, not because of anything Lisa does, but because of compound interest. That's just how it works, folks. It just goes up and up and up and up and up, and you don't have to work any harder for it. It's a pretty fucking cool thing. So she takes the money out and she buys the car. But then instead of just being stupid with her money, she treats her money the same as she would have treated the bank's money. And she then pays her bank back a monthly payment, the same dollar amount she would have paid to any bank that would have, given her the money for the bank or for the car. So when she pays herself back, she's paying herself back with interest. So let's say she could have went to Bank of America and got a car loan at 3%. She's paying herself back the same payment with 3% interest. So now she's first made the spread from what she's making from the insurance company to what she's got to give back to the insurance company in interest. She makes that spread, which gets bigger every year. So she's winning more and more every year. But then she makes a true 3% because she's paying herself back a payment for the car equal to whatever the bank would have charged her. 1, 2, 3%, doesn't matter. She's the bank, folks. She sets the terms. She's in control of her money. Then the other thing, BB Singh said, kinda, but what if you don't have the money to buy the car or whatever else whatever else to become the bank? This is a great question. And BB Singh, man, I love your questions. You're on fire today on TikTok here. Instagram, I don't know. Everybody just keeps saying they love me. And that's cool by me too. But hey, let's get some good questions coming in from Instagram too. So BB Singh, if you don't have the money to buy the car, and many people are in this boat, the bad news is you have to capitalize your bank. So there isn't a bank that's ever been opened out there that didn't have initial capitalization. They didn't have initial money that they started their bank with. And I mean traditional banks. So if you start your own bank, You might be like I was when I first started, and it was a long time ago, where you just have to start capitalizing the bank slowly. And how I did it with about my first banking policy was about $230 a month, way back when I didn't have the money that I have today. And what I did is I just over time kept building up my bank until I did have enough, which was about 4 years after I started. And I have 8 policies now, but 4 years after I started, I had enough money to buy my first used car. And then I started practicing that. So Lisa would have had to have had the money in her bank to be able to do this. So I'm not saying this is for everybody. And I'm not saying everybody can get all the money back for every car they buy, drive, and own. But that's actually not true, because they can, but it's going to take you time to capitalize your bank. So hopefully that helps. Kay Marquez says here on TikTok, which companies do we work with? Well, we work with some of the largest mutually owned insurance companies there are out there. To name a few, Mass Mutual, Lafayette Life, One America is a really good one that we use. Penn Mutual on rare occasions, and some other good ones that you can use are Guardian. That's a commonly used one. So just to kind of give you a couple, but this is what we do, folks. We only do this. If you want help with this, watch the 90-minute video, go to chrisnaugle.com or join Stephen today on the Wealth webinar and learn how to do this. So if you're on TikTok, I got so many videos on TikTok, just watch them. A bunch of videos on cars on how to do this. So it's not about the company. It's about the concept. It's about how it's designed. Too many people ask like, oh, what company do? They run out to their advisor, say, hey, I want one of those whole life or those specially designed whole life policies with Mass Mutual. And your advisor just sells you a regular whole life, and you look at it and you're like, man, this thing looks like crap. That Chris Naugle guy was lying. I'm not lying to you. Your advisor just doesn't know how to do this. Or your advisor doesn't want to give up 90% of his commission to basically do it the right way for you. It's one of the two. Okay. More than likely, they don't know. So don't just think it's about the company. It's about how the company and how we design it. Let's see. So how many advisors rake people for commission? Sammy on TikTok. Great question. The answer, probably way too many. And I'll speak from an old advisor standpoint. It wasn't their fault. They're just not shown this. They're not shown how they can give up their commission so that their clients have more money to use. So how many advisors rake people for commissions? I don't know if that's a true statement. I don't think they're intentionally trying to rake you for commissions. But if you're an advisor, if you put yourself in their shoes, they're trying to sell you a product that pays them the most amount so they can feed their family, put Christmas presents under the tree, because they haven't yet learned that the goal and the number one thing if you want to become wealthy is to solve more people's problems. They haven't understood the scale.
Chris, I can talk on that too, from a firsthand perspective. Out of college, I got recruited by Ameriprise Financial, which at the time was American Express Financial Advisors. And they basically told me, hey, if you can pass your Series 7, your Series 66, and your life and variable annuity insurance licenses, then you'll become an appointed financial advisor with us. So I studied, I passed the test. I became a financial advisor with them. I worked 65 to 75 hours a week. The majority of that was cold calling people, reading scripts that they gave me that they told me to memorize and learn. I would then meet with clients with the senior advisor in the room, and they would pitch them on Ameriprise's products. They would have trainings with us, hours and hours and hours every single week, teaching us Ameriprise's financial products. So all I knew was Ameriprise's financial products, what we offered, and what we were told to sell people that made sense for them. You know what I mean? And so it's not in most cases, it's not the fault of an advisor, of what they're doing out there. It's just what they know. You don't know what you don't know. So if you're giving financial advice that you're told by this large financial institution, American Express is the absolute best advice you can give to somebody with this financial plan, why would you ever think that's not a good idea? So as an advisor, it's just you're taught one thing. That's what you do your entire career. And then you move up, and then you start helping the new advisors. And then you move up to management, and then you run a couple offices. But you're still doing the exact same thing you were taught on day one. So to learn things like privatized banking, like private money lending, like how do private funds work, like all this stuff, real estate investing, you have to go out there and seek it on your own, because nobody's going to teach it to you from a corporate perspective, because there's no money in it. The only way to make money in is by doing it the way that we do it, by just sharing the information and letting people make their own decisions. So I don't think it's a fault of the advisors, or they're intentionally raking people over the coals. Maybe there's outliers, of course, but for the most part, it's just the way the system's created. And one thing that we know as a fact, the system doesn't work. According to the Social Security Administration, 95% of people in this country will not be able to retire at the age and lifestyle that they want to retire. So that tells me that 95% of the system is broken, doing it the way that we've been told to do it our entire lives.
Oh man, bravo. So like Stephen couldn't have put that any better, folks. And I hope you guys were listening. I know a couple people over here on Instagram actually commented listening. You should have, because it's not so much that the advisors are doing wrong by you. It's just they're literally drinking the Kool-Aid. Their only knowledge base is what they've been taught, just like all of you. The only thing you know as truth is what you've been taught your whole life. But it doesn't mean that it's true. It's just all you know. And until you stop and you start to seek the truth, you start really taking the rosy colored glasses off, like I had to as an advisor. I had to take the glasses off and say, wait a second, is what the wealthy are doing, even though it's different than everything I was taught to do, is that the truth? Or is what my brokerage is teaching me to sell the truth? I had to make a decision, and I had to figure out a fine line. I had to cross that line and say, which one is real? And what I found is what I was taught as an advisor, although not all useless knowledge, was there to solely serve Wall Street and the brokerages, to make them money, not to make my clients more money. It was to make them money first, and then make me money second, and then make my client money third. Do all of you realize that is broken? It should be to make our clients money first. Clients' goals and problems and solving them should be number one. Then it should come back to, yes, maybe the brokerage making money, and then us last. You have to stop living in a world where you take, and you have to start living in a world where you give. The more you give, the more you will get, the more money you will make, and the more wealth you will have. Guaranteed. No ifs, ands, or buts. It's a law. So then the second thing, one more comment, Stephen.
If things were set up that way, though, how would the Morgan Stanley CEO be paid $33 million last year?
He wouldn't. He'd probably be making $2 to $3 million. That's not a bad living, but hey, listen, sometimes you got to let the cards lie where they are. So here's the problem. The problem isn't so much that the advisors are lying or trying to rake you over. It's just they're teaching you from a pool of knowledge that they were given from the brokerage, which is self-serving to the brokerage. The problem with advisors is because of their capacity, because of their status, because they have the licenses and they're called the financial advisors, they have arrived. For any of you that don't know, I have a great podcast. I have two podcasts, actually. One is called The Real Estate Money School, and one is called The Chris Naugle Show, which is a celebrity show. But I just did a awesome, and I don't ever mean to toot my own horn, but an awesome podcast on what I'm going to tell you next, called The Arrival Syndrome. It launched today. So if you guys follow podcasts and you want to listen to something really good with me yelling and getting really excited, if you like that, then watch that podcast. It's hitting today. It's The Real Estate Money School. But the problem with advisors is not their pool of knowledge, is not that they're doing something wrong. The problem is that they have arrived. They've literally gotten to a point of ego and of, just a knowledge base that they think that they know everything. And there's nothing more that they can learn. So they have literally shut off their learning capacity, their creation capacity, because they think they know everything. And if something new comes into their world, like what we teach with the infinite banking concept, it's a foreign object, and they try to kill it. They try to squash it without even understanding it, without even knowing what it is. They try to destroy it. It'd be like trying to destroy a virus without understanding what the virus is and how it operates. You're never going to do it. But that's how their minds work. Their minds, because they've arrived at this level that they can't learn anything more, they shit on things that are probably best for their client, but because they don't know it, they don't have the skill set, and they're failing to go out and research it. Not all, like CFPs, I love, because they have a fiduciary capacity to their clients. So if their client brings them something, they might have an opinion on it, but their duty as a fiduciary is to go out and seek the knowledge and say, yes or no, factually, does this work for your specific needs? I love CFPs, and we do a lot with CFPs because they are some of the only advisors that actually are open to learning more, because they have to, because they have a fiduciary capacity to their client to learn it. Not all CFPs are good. Some actually don't do this, but most do. So I just want you to understand that your advisor just has arrived at a level where they don't want to learn anymore, and it's sad. So let's see. Trevor White said, I love the example of the Ford Focus in the book. That's awesome, man. Thanks. We still got people saying, which company do you like to make for IULs? We don't do IULs. We don't support IULs. And we don't like IULs. And yes, Trevor, I am going off. Of course, that's just the thing. Scott, we're talking about lots of things. not just life insurance. You must have came in really late because we've been talking about the markets. We've been talking about crypto. We've been talking about Fed policy. And now we just got off on a topic on where we're talking about privatized banking, which just happens to be using specially designed and engineered whole life. So I think we got all those questions. Cynthia said, ask backwards. You're darn right it is, but it's self-serving to the brokerages. So that's how it works. Let's see. J. Michael Smith here on TikTok says, I do not sell IULs, only whole life with mutual companies. Kudos to you, man. Obviously you've decided to take off the rosy colored glasses and learn that there's something more to this. And I think really it doesn't need to be a big learning curve for all of you. Why? Ask yourself this one question. When you're really deciding, is it an IUL that works best for you or a whole life? I want you to ask banks. Some of the smartest financial institutions, I'm not saying the most ethical or the best, but they are smart when it comes to money. What are they buying? What are they buying for their tier one capital? Is it IULs? Look it up, folks. Absolutely not. Banks do not like IULs. They sell you IULs, but they don't buy IULs. What do they buy? They buy BOLI, bank-owned life insurance. What is BOLI? Look it up, folks. Whole life. Not the same whole life you would buy from your broker, but the whole life that we design, specially designed and engineered whole life, that's what they buy. And how much of it do they own? As of 2019, Stephen, correct me if I'm wrong, I think it was 192 billion and climbing. So do you think banks are stupid, or do you think they know something you don't know? And why aren't they buying IUL if everybody's shoving IUL down your throat? Just wake up, folks. Wake the fuck up and start learning what the truth is and stop living the lie. But hey, if you want to live in the metaverse and you want to live the big lie, this show isn't for you. Or you can just come on here and we'll argue with you the entire show. Pick whichever one you want. So good job, J. Michael. I love it. What else we got, Stephen? Or are we out of time?
Yeah, I think we're wrapping up. I know you got meetings ahead too. I got some phone calls and clients to call. So it's been a good day. I mean, I think we got into some good stuff today. You know, just in other news, it looks like the debt ceiling that was needed to be raised again by December 15th. It looks like there's a deal in the works for that that's passing through the houses of Congress currently. So we should not see a government shutdown this year, at least. So that's good news. Other than that, you know, stocks are back up. I was just looking at an article saying if you were to have sold, you know, a couple of weeks ago when things were starting to slip, you want to be in a better position. It's just, you're going to see a lot of this stuff like stay in the market, stay in the market, stay in the market. Remember what we talked about for the last hour. There's a reason why they want you to stay in the markets, because if we start seeing these drops and everybody starts to sell, it's going to keep going. So they want you to stay in there because they want to be able to get their money out at these higher levels. They want you to hold thinking it's going to come back up. And then all of a sudden we're 40, 50, 60% down. And holy cow, it's too late at that point. So stay frosty out there, my friends, and stay up and let's have some fun with this thing, huh?
Hey, Frosty. I love it. Thanks, everybody, for joining us for another episode of What the F Happened. And all of you have a good day, a good week, and we'll see you this afternoon at 1 p.m. for the Wealth webinar. See you then.